Welcome to TalkTickers. Today, we're digging deep into Flexsteel Industries. Now, this is a company that's really navigating some choppy waters in the residential furniture world.
Absolutely. Yeah. But they're doing it with, well, remarkable discipline and a clear strategy. It's quite interesting to watch.
It really is. So we're going to unpack their latest earnings call, specifically their, pretty impressive fourth quarter and full fiscal year 2025 results.
And we'll look at management's playbook, how they're managing to thrive, not just survive. Plus, a peek at their outlook for Q1 fiscal 26.
Exactly. This isn't just about the numbers, right? It's understanding how a company sets itself up for success, even when the industry is facing headwinds.
And Flexsteel's consistency is kind of fascinating. Even with the whole furniture market under pressure, they keep delivering. Their discipline really shows.
Okay, let's dive into the Q4 2025 performance snapshot then, because the numbers are, well, compelling. Net sales hit $114.6 million.
Yeah, which was near the top end of their guidance.
Right. But here's the really standout part for me. This is their 7th consecutive quarter of year-over-year sales growth. 7 straight quarters.
That kind of momentum, especially now, is pretty rare in this space.
And it's not just sales. Their adjusted operating margin, a really robust 9% in the quarter.
Which, is a big jump, 3.4 percentage points better than the year before.
And even more impressive, it's their 9th consecutive quarter of year-over-year margin improvement. They keep beating their own guidance, too.
That just screams operational efficiency, doesn't it? 9 quarters of
that environment.
Yeah.
Yeah, it's remarkable. And financially, they pulled in $19.1 million in free cash flow just in Q4.
Which boosted their cash on hand to a very healthy $40 million.
Plus, their sales order backlog grew. It's up to $66.5 million, about $6.9 million higher year over year. That backlog gives them a bit of a buffer.
It does. And worth a quick mention, they got a $1.9 million boost from the stronger Mexican peso in Q4. A nice little tailwind there.
Okay, so zooming out to the full fiscal year 2025. Despite that tough industry backdrop you mentioned, Flexsteel still grew sales by 7% for the whole year.
And expanded those adjusted operating margins by 2.7 percentage points up to 7.1%. Adjusted operating profit soared up 71% to $31.2 million.
That's not just growth, as you said, it's profitable growth. Really strong.
And the cash generation for the full year, $45 million in free cash flow. Just as impressive.
Which let them hike their dividend twice in the last year. That sends a strong signal, right? Confidence, financial health. Shareholders like to see that.
Definitely. I mean, these results, they just show strong execution all around. Financial discipline is clear. And the market reaction was very positive after the release. It reflects that consistent performance.
Okay, so we've got the impressive numbers. Yeah. The big question is how? How are they pulling this off when others are struggling? What did management say were the key drivers?
Well, they pointed to pretty broad-based sales growth. It wasn't just one thing. It came from their core markets, sure, but also these key new initiatives.
Like what specifically?
Think about products like Z-cliner. That's their move into the health and wellness category, a bit of a niche for them, and also expanding their placements in case goods.
Case goods being the non-upholstered stuff, right? Yeah. Tables, dressers.
Exactly. And management really emphasized their success with strategic accounts, those big, steady customers, and also that new products they've launched are really hitting the mark with consumers.
That sounds like a solid mix. You mentioned disciplined product portfolio management was key for margins too. What does that actually look like at Flexsteel? Are they just cutting unpopular lines?
It's a bit more than that. It sounds like they're really using consumer insights, like understanding their specific customers, not just general trends.
Ah, okay. So data-driven.
Precisely. Being, maybe a bit ruthless with products that don't hit profit targets or aren't selling, but then quickly scaling up the winners like that Z-cliner line. That's the discipline part.
Makes sense. And it links back to operational execution, getting the most from every sale.
Right. That customer-centric approach seems to be really working. What other strategic things are giving them an edge?
Well, they talked about completing deep customer segmentation work, lots of voice of the customer studies.
So not just market research, but really getting inside the heads of their key accounts.
Yeah, to strengthen support for those accounts, elevate their value proposition. Knowing the customer inside out helps build those stronger relationships.
That tracks. And they're investing in innovation too, right? Bigger, bolder innovation.
Yep. Ramping up consumer insights capabilities, standardizing product platforms, and, interestingly, commonizing parts.
Commonizing parts. That sounds small, but it can be huge for speeding up new product development, getting things to market faster.
Exactly, like building with Legos almost. Faster design, faster launch, maintains quality.
And they're still scaling up marketing efforts too. Brand awareness, demand generation. Crucial in a fragmented market like furniture.
Definitely. And they seem really focused on pushing further into health and wellness with Z-cliner, plus a big expansion in case goods planned for fiscal 26. It's strategic market expansion.
And getting those products out there more broadly, right? Partnerships with Wayfair, Costco, and new national accounts like Macy's, that really expands their reach.
It does. Another huge differentiator, I think, is their financial flexibility. They're debt-free now.
Which is massive, especially now with interest rates where they are. It's not just a line on the balance sheet, it's a strategic weapon.
Gives them agility, right, to invest or just weather downturns without that debt pressure hanging over them. Management sees it as a big advantage with all the current uncertainty.
A very powerful position. So how does that translate into their capital allocation plans? What are they doing with the cash?
Strategy's consistent, they said. About 70% of operating cash flow goes back into the business, funding that growth we talked about.
Yeah, the other 30%.
Back to shareholders. Dividends or maybe opportunistic share buybacks if they don't see investment opportunities with high enough returns. It seems balanced. Growth first, but reward shareholders too.
Okay, makes sense. Let's pivot to the outlook then. Q1 fiscal year 2026. What are they expecting?
For sales, the guidance is between $105 million and $110 million. That's about 1% to 6% growth year over year.
Okay, still growing.
Yeah.
And gross margins?
Projected between 21.5% and 22.5%. And importantly, that number includes the expected hit from those 20% Vietnam tariffs.
Right, factoring that in already. Operating income.
Forecasted between 5.5% and 7.0% of sales. Now, cash flow, they expect free cash flow between negative $5 million and zero for Q1.
Which sounds potentially alarming, but you said that's normal for their Q1.
Yeah, they flagged it as normal. It's mostly timing, paying out incentive compensation, annual insurance premiums, not a red flag about their overall cash generation.
Got it. And CapEx looks pretty light, $1 to $1.5 million. Tax rate for the full year, around 25%, 27%. Seems straightforward.
Okay, now here's where it gets really interesting looking at the bigger picture. The whole residential furniture industry is still facing, soft, choppy demand. Summer was tough, retail traffic sporadic.
Yeah. Imagine trying to run a business like that. Planning inventory, production. It's tough when consumer behavior is so unpredictable month to month.
Management points to the usual suspects. Ongoing tariff worries, potential inflation rearing its head again, high interest rates squeezing consumers.
It's a real battle out there for many companies. But Flexsteel seems to be navigating it better than most somehow.
And despite all those headwinds, management sounds pretty bullish, at least medium to long term. They keep talking about strong underlying housing demand and expecting an eventual economic recovery to really boost furniture demand.
They think they're well positioned for that eventual rebound.
Which brings us to tariffs. How exactly are they tackling that risk? Especially the 20% on Vietnam imports, that's a big deal. They've got a multi-pronged approach, which seems smart. First, diversifying the supply chain. Moving some sourcing out of Vietnam, finding suppliers elsewhere.
Spreading the risk. Makes sense.
Second, internal cost savings. Looking across the whole chain supply, manufacturing, logistics, sourcing, finding efficiencies to absorb some of that tariff cost.
Okay, tightening the belt internally.
And third, this is the bit that affects pricing. They put tariff surcharges in place from 4% to 8.5% starting August 1st.
Ah, passing some of it on. But didn't they do something else too?
Yes, and this is the clever part. They simultaneously cut their existing ocean freight surcharges.
Oh, okay. So the net price increase for the customer is smaller.
Exactly. It minimizes the hit to the retail price, helps them stay competitive, and hopefully avoids crushing demand. They actually expect all these moves combined to pretty much offset the tariff costs.
Wow, if they can pull that off, that's huge. Mitigating a 20% tariff hit almost entirely. Very impressive.
And just quickly on the currency thing, that Mexican peso boost in Q4, management made it clear that was a bit of an anomaly. Over the whole year, currency impact was roughly neutral. So don't bake that Q4 gain into future expectations.
Got it. Good clarification. Okay, so summing it up, Flexsteel, incredibly resilient, operationally disciplined, tough industry, but they're debt-free, sitting on cash, actively managing big risks like tariffs, playing the long game.
Right, which brings us to our This Is Not Financial Advice segment. Time for an outrageous but plausible trade idea.
All right, let's hear it.
Okay, how about this? Consider initiating a long position in Flexsteel, but using a long-dated, out-of-the-money call option. Say, targeting a strike price significantly higher than where it is now, maybe 18 to 24 months out.
Okay, so out of the money and long dated means you're betting on a pretty big price jump over the next couple of years. High risk, potentially high reward. That's the outrageous part given the furniture sector's volatility.
Exactly. That OTM nature plus the general choppiness of retail furniture, that's the risk, the outrageous bit. But the plausibility, that comes from management's own confidence.
Their long-term view on housing, the economic recovery.
Right. You're basically leveraging their conviction that furniture demand will surge eventually.
Okay.
Combine that with their track record growing profitably, managing risks, building that brand-driven innovation competitive moat they talk about.
So it's a bet that their fundamental strength and management skill will win out over the near-term industry noise and eventually drive the stock much higher.
Precisely. A long game bet mirroring their own strategy. But again, purely for discussion, not advice. Do your own homework.
Absolutely. So to recap, Flexsteel's delivered a really strong performance. Impressive financial discipline, strategic agility, clear vision despite the challenging backdrop.
They've hit major milestones, debt-free status, big profit increases, while actively fighting back against headwinds like tariffs with a smart, layered strategy.
And maybe the question for you, the listener, is, as you look at the furniture market, or even other consumer sectors facing pressure, what other companies show this kind of clarity and operational skill?
Who else is managing to innovate and stay profitable when things get tough? It really tells you something about the quality of the company and its leadership.
Definitely something to think about.
Thank you for joining us on TalkTickers. Remember, everything we discussed today is for informational purposes only. It is definitely not financial advice.
Please do your own research and analysis before making any investment decisions.